All right, everyone, welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street for Main Street. If you've not done so already, don't forget to give the video a thumbs up, comment, subscribe to Jason's channel. Come find him on Patreon. Come find me on carnivoretrades.com or my YouTube channel, Carnivore Trades, for swing trading alerts, analysis, and live day trading. Anyways, let's get into it here this week. So a lot going on here. And again, we talked about this the last couple of weeks that there's going to be tape bombs everywhere. This is the new regime. This is Trump's market. And you can see if we flip to the intraday today, another, just deep sell out of nowhere. Granted, it wasn't, spiders finished down 1%. It wasn't insane, but this type of volatility has been kind of par for the course. And they've done this playbook 3 weeks in a row. I want to show you here the futures. I don't normally get into intraday stuff in this video, but just to show you the makeup of it on the futures here, because I find it important. But you're going to see, obviously, 2 weeks ago, we had a rally up. Monday, Tuesday, Wednesday, Thursday. Friday, we tried to break out, sold into the close, gap down on the tariff stuff. We rallied back all week. And then again, that was the deep seek. And then this was the tariff. We rallied back. We popped Friday, and it ended up being a bull trap. We gapped down on tariffs. We came all the way back. And then today, what happens? We try to rally this morning, and we sell off pretty sharply. So again, it's like Monday through Thursday, buy the dip. Friday afternoon, sell everything, right? Now, what I'm bringing this up for is they're not going to do this again. Like, this is only going to work, so many times before the rug gets pulled. So either the bears are going to finally win here, and they're going to gap it down, and it's going to go hard to the downside, or this is a bear trap, because everybody's conditioned now to expect a waterfall sell on Monday. Look at the gap down. Look at where we opened Monday morning, and look at where we opened Monday, or I should say Sunday night 2 weeks ago. I mean, this is, so it's the same playbook. They're not going to do it again. And I just want you to zoom out here too. If we look at, just go to the S&P. Let me go to this. I'll go to the spiders here. I know we're jumping around, but right now, it just looks kind of like a bull flag to me. So a lot going on right beneath all-time highs. Zooming out though, kind of looks like a bull flag. And there is still room for a higher low. A couple of things I want to talk about though, from a technical standpoint, is I don't normally talk about this, but it is something I use, and it's the McClellan oscillator. It's essentially kind of an oscillator of like breadth, it's like a proprietary breadth indicator essentially. And the idea is, obviously down. Think of it like RSI, right? If it's down, usually it's contrarian buy. If it's really high, it's contrarian sell. And in bull markets, typically anything below like the red line or anything close to the white line, which is negative 200, is usually you're going to see a major low. We saw that last October, October 2023. We saw it again in April. Didn't quite get there in August, although I think it was technically touching oversold. It just closed above that. In bear markets, it kind of overshoot a little bit. We can see in bull markets, it doesn't. Essentially, what I'm saying, though, is we've gone sideways for 3 months, and the McClellan here on the weekly is saying we could be bottoming. So believe it or not, it could be just a base here for, I know it sounds hard to believe, but another trend leg to the upside. If Trump wants to get that 2-year yield down, which he's been talking about, the market may like that. And European markets have been, their central banks have been cutting. And if we look at the London FTSE here, that just broke out of a big weekly base, and it's at all-time highs, or just off of all-time highs. And same thing kind of with the DAX here. So just closing at an all-time high yesterday. So in the short term, yields coming down can be good. If that comes down too fast, or if it comes down, there's a recession fear, then it can be problematic. So just kind of giving you that macro case here. That said, we did get jobs data this morning and more inflation data. Michigan consumer sentiment blew out expectations under the upside. Consumer not feeling good, and inflation expectations way above expectation. Non-farm payroll missed, but the wages went up by quite a bit. So what we saw today is, we told you guys TLT was going to 90, and it did on Wednesday. We did back off. So bonds taking a hit, obviously, with harder inflation data. Dollar rallying today with hotter inflation data. Market selling off, right? That makes sense. But with that said, That's kind of the other side of it here. So next week we have CPI, and that's going to come into focus very, very much. We got Mag 7 earnings out of the way. Amazon reported yesterday. Stock was down a little bit, nothing terrible. It's still, kind of near previous all-time highs, right? So we got through most of Mag 7. Palantir absolutely ripped, by the way, this week on earnings as well, as I'm sure many of you are aware. But big picture here, despite all the data, tariffs, DeepSeek, kind of weak Mag 7 earnings, right? Mag 7 did not really do that great on earnings, at least even the ones that did, the stocks did not perform well, except for Meta, which is now 14 days in a row up. But despite all this inflation data and all this extra stuff, the stock market's still 1% from all-time highs. So we're still seeing a resilient market, and that is still bull market behavior. So just be aware of that. We do have other things too. Reverse repo starting to run dry. There's whisperings about the yen kind of carry trade coming back up. So there are risks here, but from a structural technical standpoint, there's really no damage and there's no problems. If we get through 6,100, we could see a massive trend leg. Maybe that would be a blow off top. I think that's likely. So Sunday night will be very interesting to see where we open. We didn't sell off that hard into the close, honestly. It was kind of just a lazy close right around the 600 handle on SPY. So no real technical damage, but it was a good pullback. So right now, still got to give the buyers the bias until they prove it here. And I think that would be a break of 590 in the short term. That could do some technical damage to the chart. At least on a closing basis. I mean, we can zoom out here and, there's a trend line right here that kind of lines up with that as well. And that it's held so far. If you're not comfortable swing trading this market, step aside, sell some options, pick up a GPIQ, something like that. A couple of members of my room have this. It's kind of a premium ETF. I think GPIX is the S&P. But it's a day trader's market, and you got to be on your toes. Anyway, Qs here. Again, a little bit of weakness here today. 530 is still major resistance. I'm not even worried about the double top. I think if we can clear 530, I think this will break out. I think the double top will be an afterthought at that point. You do have higher lows, and if we look at the NQ, my bull bear line is still 21.5. Right there. That's the previous all-time high. We're above that, and you've got higher lows here on the futures. So Nasdaq's still in decent shape. Russell 2000 in decent shape. Very nice bull pattern here, especially on the RTY futures. We gapped down, we closed above the green bar, and we rallied back up this week. I think again, this is basing here. This can go higher too if we can catch a spark here. Again, who knows? Maybe CPI is soft. But also, just keep in mind, banks right now, COTs, commercials, are long the Russell, they're long the Dow, and they're short NQ. That could be a hedge for Mag 7 earnings. That could have changed by now, but they are still long the Russell. So that keeps me kind of bullish. I don't think that they would be long small caps if they saw risk here. So just be aware of that. Anyway, Dow here, down 1% today. Still got to get through 450. Nothing wrong from a technical standpoint. Semiconductors down 1.3, held 245. This is a chart you guys need to see. So despite all of the DeepSeek stuff, despite the big sell, NVIDIA closed at the highs of the week, and more importantly, on the weekly, we had a bullish engulfing candle. So we opened below this trend line, as well as last week's low, as well as the 50 MA on the weekly, and we closed above the high. That is probably the biggest bull, piece, bullish evidence that we have here. That is a game changer if that can continue higher towards 140. So if that can get up into the 140 area, that's obviously a huge shot in the arm for the market. If we can get through that, it's humongous. So keep an eye on NVDA next week. You keep an eye on it every week, but next week very much so. IGV, we telling you 106. That's where it went today. Finally got there and it backed off, but again, there's room for higher lows here. Again, Palantir is a big part of that. Palantir is now, I think, like probably the fifth or fourth biggest stock in IGV now. And I think it's the 15th largest in the NASDAQ 100 now too. So Palantir helping out. Through 106, IGV can go to double top and then new highs. Transports today were kind of flat. So even though they were down on the week, with all that bad data this week, they didn't really respond. So I think a lot of this data this week was just kind of the VIX dealers defending the 15 handle, which I kind of figured would happen. So, and again, even like I said, even with the market down today, we held the 600 handle, we held the weekly 50, or the daily and 20 moving average. So you'd think that if there was a big inflation scare, transports would be down more, but still got to get through 16.2. It's not the greatest chart either, but today they weren't really that bad. Interest rates today, 2-year held up, so the yield curve flattened out quite a bit. And you got a negation of this little bear flag now because we closed above the red. So the 2s held up. There's your Fed funds. That could keep the Fed hawkish. 5s, obviously, and then 10s and 30s rallied, but less so. All right, so my general take right now is that I think the 30-year, I'm just going to use TLT, I think that $90 holds for now, but I think we get a higher low, and I think it goes to 93. At that point, I think yields maybe a buy again. That can change. That's just my general thought right now. I did close out my long bond trades for a very nice gain. Had 2 of them, TMF, and we also had ZB in the futures. But I think if this consolidates here at $90, it can go to 93 on TLT. So that would take the 30-year down to about, I want to say 4 sorry, let me use the 10s. Let's just say 4.2 to 4.25. So that's my general lean right now. XHB was very weak this week. Actually, it was, it rallied back a little bit towards the middle, but very weak today. So not responding very nicely to rates, which is typical. Needs a strong week next week in order to avoid taking out this low here. VNQ, on the other hand, commercial real estate held up okay. So we closed above yesterday's low. And that said, it still needs to break this red bar here and close above it, but not terrible considering the inflation data today. Another point for bulls here is XLF, down today, but again, above yesterday's low, and it's right at new all-time highs. JPM, Goldman, Morgan Stanley, the trifecta, they're all at new all-time highs or just off of them. KRE also, again, closed inside of yesterday's range. So not a terribly risk-off day for regional banks. Again, another kind of point there for bulls. ABE did the same, although I think it closed a penny below. And then broker-dealers here, flat day at new all-time highs again. Oil is now back to trading inverse to bonds. So if we take a look here, and we just throw on the yield chart, or yeah, there you go, it's positive. But there was, towards the end of the year, Q4, really, with the exception of this run into October, yields kept going up and oil was just kind of weak. So oil was soft here, and now it's finally started to reflect yields a little bit. So I would say 70 to 71 on oil is going to be equal to about TLT $90. So if TLT holds at 90 and pulls back, we should expect oil to rally a little bit. So there's room for higher lows here on crude. I just haven't traded it. I have not liked the pattern lately. I'm not overly bearish on oil, but short term, I think you can get a bounce. XLE, again, backed off towards the end of the week. I think it did close green though. So this is one of the sectors that closed green on the week. I don't like the pattern yet. I will be getting back into it at some point though. Same thing with XOP and OIH. Uranium, not the greatest. Sideways weak. And there's a CCJ. Got to get above this red bar here on a close, because you got a lower high now with a bear flag. And that goes for URNM and URNJ too. So be careful with these uranium stocks right now. Oklo too, it's parabolic. SMR, not a bad pattern, hasn't made new highs though. But the those ETFs, so careful. So you got bear inside bar action right now. Nat gas H contract had a bounce, gapped up. You got a futures gap here, it's quite big. But $3 held like we talked about. And if this can base, it can try to go higher. But I don't think there's a good risk reward on either side here. Hasn't been for a minute. It has higher lows though. Dollar is interesting on the week too. So that big fat reversal Monday resulted in a higher low. So again, kind of like gold, remember this pattern here, which we'll talk about in a second. It's got a tightening range. So it's not tight enough yet for me to draw lines there, but after breaking this trend line, we've got a lower high and a higher low. So it's kind of in no man's land. Dollar yen's a little bit on the, a little bit in the focus right now. So we'll be watching that. If the dollar breaks down, you're looking at probably like 105.50, 106. If it can inch back up, it's still got a lot of resistance at 109.50, 110. So I think dollar is going to be a little range bound for a while here, which could be good for markets. It was on a tear for a while, so markets don't like it when it goes up too much too fast. Gold, what can you say? It's going to 3,000. And new all-time high, new all-time weekly closing high. GDX, positive week as well. I should have bought at that trend line that I talked about, but there it is. You know, you're not going to get every one of them. Silver had a basically a sideways week, but nothing wrong. You got bull inside bar here again. I'd like to see a little bit more of a base. This will go to 38 afterwards. Platinum down this week, but it held up, so possible higher low there. I still have my Sprott here. It was very close to taking some gains on it on Wednesday. It did back off here, but there's room for higher lows, so I'm still holding on to that. Palladium's the one that's a little bit weaker. This might need to go test 950 first. You do have a possible, it's not even a pattern yet, but this could be like a little inverse head and shoulder setup though. It's got to curl up. It's got to curl back up first. The one that did play out though, and again, kicking myself for not taking this one, but you got the beautiful WV on copper. So this is textbook, you know, this is how I teach it to my course and to my traders. When you get a WV, you want a 618 retrace or a 50%, but the 618 is even better. And I mean, it literally went there to the penny. So that is a WV. It's a, you know, essentially a double bottom with a higher low, and that took off. Cleared resistance too on the weekly time frame. So right now, copper futures probably 470, 480. And look at this on the monthly too. Oh boy, that's curling up there on the monthly too. I'm just checking here at 4.025. Yeah, this never closed below that monthly green. So copper futures are really strong here. But next resistance up here at 4748. So congrats to copper bulls. Crypto here a little weak. So we had that big margin flush on Monday. They are printing a ton of tether, so that's going to be supportive. But Bitcoin still got to get back through 100. The altcoins are definitely weaker. Ethereum, I'd like to see it hold 24 on this trend line here. I wanted to buy some in the overnight last Monday morning. I just, you know, I wasn't going to issue out an alert for something like that with my members. Not everybody can trade, but yeah, 2,400 would have been an amazing buy there with that huge tail. A lot of the time when you get these tails though, they will fill out. So I'm expecting another trend line hit here, and then maybe it can kind of inch up. There is a lot of demand right here though. So you have essentially a bear flag that failed. There's going to be a lot of demand in there. So it's going to take it a long time to break through that if it's going to go lower. And if not, then, you know, it can try to go higher. But you definitely damaged that chart a little bit. Bitcoin's still holding up though, especially on, as you guys know, the weekly. This 20 MA has now caught up to price. So if this wants to break out, it can. I'm not saying it will, but it can. So anyway, right now, structurally, bull flag so far. Maybe even like kind of a cup and handle-ish look on SPY. In fact, I have one drawn right here on the other chart here. Just get rid of the fib. So kind of like almost cup and handle type look there. Yeah, we could see higher lows too. We have CPI next week. Just be careful. It's tough to swing trade if you're not very comfortable doing it. It's a day trader's market. If not, just kind of sit aside here until this range breaks. But if it does break to the upside and we break 610, we could see a massive trend like if that holds. So be aware of that. Anyways, guys, I'll wrap it up here again. You guys take care. Don't forget to come find Jason on Patreon. Come find me on carnivaltrades.com. We'll see you guys all next week.